The world is changing fast. Money, power, and strategy are being rewritten. Welcome to the new rules of the great game.
If you're an investor, it probably feels like the world you knew has, well, it's changed. The global market in 2026 isn't just a little volatile. It feels like it's playing a whole new game. The old rules don't seem to apply, and the stakes, they're higher than ever. So let's break down what's really going on and how you can find your footing in this new and, frankly, more dangerous landscape. And this quote right here, this really gets to the heart of it. This isn't just about some boring trade policy. It's a comment on a major strategic move by China that completely reshuffled the deck. What it's telling us is that essential resources, things we need to build our future, they aren't just commodities anymore. They're being used as weapons in a global power struggle. Okay, so to really get a handle on this new world, we've got to understand the problems we're facing. Let's start with part one, this idea of geopolitics being used as a weapon. This is the most immediate challenge, where countries are using their control over critical materials to get what they want. Now, if you want to know where this is headed, you don't need a crystal ball. You just need to look at the past. In 2026, China rolled out a new license requirement for anyone wanting to export silver, effectively tightening its grip on the world's supply. And if this sounds familiar, it should. It's a move straight from their 2010 playbook, when they did the exact same thing with rare earth elements. That move triggered a crisis in supply chains that took almost a decade for the world to sort out. So what does that kind of crisis look like? Well, it looks like this number, a staggering 4,500%. That's how much the price of some of those rare earth elements shot up after China turned off the tap. And they could do it because these aren't just some random metals. They are the absolute lifeblood of modern tech. And back then, there was nowhere else to get them. Now, just imagine that same shockwave hitting the silver market, a metal that's critical for everything from solar panels to EVs. The ripple effects could be absolutely massive. But it's not just geopolitical chess moves we have to worry about. That brings us to the second major problem. The market itself is flashing some serious warning signs. We're seeing these huge speculative bubbles forming alongside some real economic fragility, and that combination creates a pretty treacherous environment for any investor.
I mean, just look at this chart from 2025. It tells the whole story. As uncertainty grew, where did the money go? It fled to the perceived safety of precious metals. Silver just exploded, returning over 141%. Gold was right behind it at over 64%. Now, the S&P 500's 17% gain, that's not bad in a normal year, but here, it was completely dwarfed. This wasn't just a trend, it was a massive, undeniable flight to safety.
So on one hand, you have all this fear driving people into metals. But on the other hand, a completely opposite emotion was taking over the tech sector, pure euphoria. This quote from JP Morgan just captures it perfectly. When it comes to artificial intelligence, the narrative wasn't about the risk of losing money. The real fear was missing out on the boom. And that is a classic textbook sign of a market bubble. And all that euphoria, all that hype, has led to a pretty startling imbalance in the market. An imbalance that you can pretty much sum up with this one number: 35%. So, what's so special about 35%? What does this number really represent? Well, it reveals a huge structural risk that's been hiding in plain sight. Here it is. That 35% is the slice of the entire S&P 500's value that's controlled by just eight megatech companies, all of them fueled by the AI boom. Think about that. The market has become dangerously top-heavy. Its fate is basically tied to the fortunes of just a handful of giants.
And what this creates is a massive problem for everyday investors. It's called concentration risk. It's the classic don't put all your eggs in one basket problem, but it's happening on a market-wide scale. So even if you think you're diversified because you own an index fund, you're not. If those few megastocks take a hit, they can drag the entire market and your portfolio right down with them.
Okay, so we've laid out a world full of geopolitical weapons and speculative bubbles. It sounds a little scary, right? So this brings us to the most important part, the pivot. How do we actually deal with this? Well, it all starts by asking a really fundamental question about how we approach this whole thing. And this is really the core dilemma for all of us. When the markets feel this chaotic, this unpredictable, it's so easy to feel like you're just at the casino, just rolling the dice. So how do you participate and build wealth without it just being a gamble? How do you make decisions based on a real strategy and not just on hope? It really boils down to understanding this critical difference. See, investing, real investing, is a process.
It's based on analysis, on understanding what you own, and on taking measured risks. There's a reason, a why behind your decisions. Gambling, well, that's what happens when you don't have that justification. Your decision is basically just left up to chance. And to survive and thrive in this new environment, you have to make sure your actions are firmly 100% in the investing column.
So what's the solution here? How do we actually invest and not gamble? Well, the good news is that even when the rules of the game feel brand new, the core principles for a winning strategy, they're timeless. They haven't changed. So it's time to blow the dust off and open up the Timeless Investor's Playbook. And you know, the single most powerful tool in this entire playbook has a simple name: diversification. Its main job isn't to make you rich overnight by hitting home runs. No, its goal is to manage risk, to play defense. By spreading your investments out, you're making sure that a fire in one part of the market doesn't burn down your entire portfolio. It's that simple. And listen, real diversification is way more than just owning 20 different tech stocks. That's not it. It means spreading your money across different asset classes, like stocks and bonds, across different sectors, like healthcare and energy, across different geographies, like the US and emerging markets, and even across different investment styles, like growth and value. That's how you build a truly resilient portfolio. Now, here's a step that people almost always forget, but it is absolutely critical. It's called rebalancing. Look, over time, if your stocks have a fantastic year, they're naturally going to become a bigger and bigger piece of your portfolio pie. And that means you're taking on more risk than you originally planned to. Rebalancing is just the discipline of periodically trimming those winners a bit and moving that money back into other areas to get your risk level back to where you're comfortable. So how do you actually put all of this into practice? You know, it sounds like a lot, but it really comes down to a simple 3-step process. First, you create a plan, a real one, based on your own goals and how much risk you're comfortable with. Second, you choose the right mix of investments to actually make that plan happen. And third, and this is key, you manage that plan over time. You check in and you rebalance when you need to. That's it. All right, let's just quickly boil this all down to the key takeaways. Number 1, the game is riskier now, period. Number 2, the market's concentration in just a few stocks is a real and present danger. 3, your best defense against all this is using those timeless principles, especially diversification. And finally, remember that having a disciplined plan will always beat chasing the latest scary or exciting headline. Always. And that really leaves us with one final thought, a question you should ask yourself as you look at your own finances in this new era. In this new great game, is your strategy actually built to win, to proactively achieve your goals, or are you just playing defense, just hoping not to lose? The answer to that question is probably going to define your financial success in the years to come.